All right, good afternoon, everyone. I wanted to push out this emergency market update video after what has happened last night in the stock market. Okay, so if you didn't know what happened to the stock market last night, something big actually happened. Like we've seen the stock market went from like very green to totally very red, and there's a lot of panic in the market, which we will dive into this video later. And I will also share with all of you what lies ahead and what you should think of for each of your companies and portfolio as well. So let's get started right away. So as usual, guys, please, I would really appreciate it if you could hit the like and subscribe. You know, it really help me to keep making these videos for you. So let's dive into what actually happened last night. So yesterday when the market opened, right, we were coming on to the market open on the backdrop of a very, very strong Nvidia's earnings, right? They were beating on every single metrics, right? And you can see that because of their results, it actually pushed up the overall market. When the market opened yesterday, right, it was all green. But by midday, right, what actually happened? Okay. And by closing, right, you can see the total swing of the overall market. Nvidia, right, from 4.5%. Guys, 4.5% on open, when it closed, right, it was down 3%. So that is like a 7% swing in total, And not only Nvidia, when we look at the S&P, right, we also saw that kind of swing that is not commonly seen, very, very uncommon and very, very unusual. And if you look at Nvidia's earnings, right, they did exceptionally well, beating the guidance, beating the EPS, look at beating the revenue estimates. They beat every single thing. And then, so the question was, okay, so what happened? Why did the market tank even after Nvidia reported their earnings and even went on to close negative as well? Right? So when we take a look at it, right, so you can see for Nvidia, right, they actually went from, this is actually plus 4.5 billion and totally wipe out their gains on the day as well. Okay, so this was one of the big things that happened, right? Because Nvidia, for those of you who know, right, Nvidia kind of is like it leads the market, right? It's like the biggest company that the whole world is looking at. In fact, it's one of the biggest company right now. So when their earnings did very well, right, it gives a lot of signal to other companies on how they will fare. Okay, so if they do well, they will actually push up. It's like a rising tide lift all boat, and the Nvidia is the tide itself. Okay, but when we look into deeper metrics, right, what are we looking at? We're looking at the fear and greed index as well. Okay, the fear and greed index, right, is at 6, guys. This is incredibly low. Okay, it was actually very, very close to what we saw back in April during Trump's Liberation Day. That was 4. So right now we are at 6. Okay, and you can see how from 1 month ago to 1 week ago, right, to just the last close, right. Last close was 11, and now we totally went down to 6 as well. So what is actually happening, right? Is it just Nvidia, or is it just some random market news for no reason that actually caused this drop? So let's break down into the different parts, okay? But the key driver of all of this is actually macro news, okay? Nothing to do with the company's fundamentals. Most of the companies have really reported their earnings, and you saw how they actually beat almost all of their estimates as well. So macro is in the limelight right now. And the first macro that came up after our government shutdown is finally the unemployment rate and the non-farm employment change. So look at the unemployment rate, it's at 4.4% as compared to the forecast of 4.3%. So it is, even though it's up by 0.1, but it's higher than expected. The keyword is expected. It's like when something happens that is not what the market expect, right? The market will react. And when you look at the unemployment claims, right, it is slightly better, right? They expected 227, but it came out to be 220. But the main driver is the unemployment rate that increase. So when unemployment rate increases, right, even though it might signal that the Federal Reserve, the economy is weakening, right, that they have to cut rates further. So initially, when these results came out in the morning, right, it was actually being supported by Nvidia's earnings as well. But surprisingly, when you look at the rate cut probability, right, one day ago, you can see, right, one day ago, right, it was 30% that they will cut the rates. And then now it become 40%, right? Because it lies on the unemployment backdrop that the market expects them to actually reduce the rates. And when rates reduce, right, uh it means what? When rates reduce means it's easier to borrow money, right? Easier to borrow money means we should actually see the market go up, right? So you can see that there's a lot of things that happened yesterday. So Nvidia's news was good for the market. And this unemployment was in a way good, but not very good in the overall economy because people are getting less people are getting hired. Okay. But in terms of the rate cut, it gives a little bit of like for people to know that maybe the Federal Reserve has a higher chance of cutting rates because unemployment is higher to boost the economy. Okay, but more than that, right? What else did the Federal Reserve say? It is this. So this is what they actually shared yesterday as well, together with the unemployment. They said that they are not going to share about the October jobs report because of the government shutdown and there is this backlog of data and they couldn't get enough data. So the market runs on whether they have certainty ahead or not. If they don't have certainty of what is going to happen, okay, if they don't have certainty, they will the market will be volatile. Okay, think of it that way. So this one news, right, probably also created a little bit of panic in the market. Okay, because when there's no data, right, people assume that the thing that the Federal Reserve is flying blind, right? Because you don't know whether will they cut rates, will they not cut rates. People are not knowing what's going to happen as well. So this was probably one of the reasons, right? They couldn't able, they are confirming this cancellation of the jobs report. So then they couldn't have this data to determine where will the Federal Reserve do next. That is that one layer of uncertainty over there. Now, we also see this happening, that Bitcoin, together with the stock market, right, it actually also just smacked down all the way to $88,000. And it's the level where it was like back in April, even though the price is actually still pretty strong, right? So what happened? Now, over the past 6 months, you guys have seen how the market has rallied after Liberation Day. And in fact, even before Liberation Day, right, for the whole of 2024, we have been seeing very strong rallies in the market. Okay, when things are bullish, when things are good, right, what do people think? People will be thinking that it is easy to make money. Okay, that means people start to take more risks. And some of these risks involves using money that you don't have to invest. This is what is happening that we're seeing unfolding, right? In crypto, it's just one sense, but in stocks, there's also these things happening. But in crypto, is very apparent as well. Because you can see that the margin debt as a whole, right, not just in crypto, but the value of debt that that people are taking, a US margin debt has increased to 1.1 trillion. So what does this mean? It basically means that people are taking more, a lot more people are taking margin debt. Simple as that, right? A lot more people are taking that to invest. Okay, be it because they are greedy or whatever that is. Lah. So this is one of the reason that and also in crypto, right? You're seeing a lot of people getting liquidated. Like in the past 24 hours, right? Another 1 billion got liquidated again because people were playing with leverage. Okay, they're using money that they do not have to invest. Okay, so there's cascading effect across stock market, across the crypto market as well. So these are some of the main reasons, the main core reasons of what is happening and that caused the market to drop, even though there might be a little bit more things which you might actually see later, which was just actually announced just like one or 2 hours ago. So what actually lies ahead next? How should we think about our stocks? How should you position your portfolio? Now, before that, right, if you don't know already, I do have a Telegram channel filled with this kind of market insight. So this is more real time and more fast paced, right? Anything I see, any new stuff, I will immediately post it over there. It will be shorter as well. So, and also the knowledge of me that I've learned over the years as well. So feel free to pause this video, scan the QR code, or you can join directly from the link in the description box down below. Okay, now what is going on ahead next? Okay, now it's not all doomsday, guys. So we know that now in the December rate cut probability, right, is only at 40% as compared to 1 month ago at 90%. That means, right, in December, we will probably not see a rate cut. Okay, the odds are 40 to 60, probably not see. Now, we and you can see that Morgan Stanley, I mean, you ignore the bank, okay, just know that the rate cut probability has just been forecast moved to 2026 lah. It will not be in December. Okay, now think about it, and just this is just simply thinking that when rate cuts, right, there is more liquidity in the market. Okay, because more companies can borrow money cheaply to invest in the business, they can potentially hire more people. So and it's easier, it's cheaper for, and people will not want to put the money in their bank, because when rates are lower, I will take my money out and I'll go and spend. I'll invest in all these on assets. So this is, in a way, it brings liquidity to the market. So even though we might not see a rate cut in December, I do think that in in 2026, right, we will still see some rate cuts that will happen. And when that happens, right, I do think that we will still see the market pushing up over time. Now, this is the one thing. The next one is something that is going to happen next year in May, which is Powell will actually be replaced. This is his last term already. His term ends on May 15, 2026. And Donald Trump will name a new successor soon. Now, we have no idea who will be the successor. We have no idea who they will do. It is all gray now. Okay, this is not a news that might affect the market, good or bad. We have to know who is coming on first, and then we can understand him. But this is to share with you of what to expect. Okay, so all eyes will be, the speculation of who will it be, but all eyes will be to see who it is. The general consensus, right, is that Donald Trump will go with someone that supports his policy. Okay, so that is the whole idea, that if, and you know, for Trump, right, what he wants to do, he wants to make sure that by the end of his term, that the market will be higher than where he takes, right? Correct. So he is a businessman, right? He want to push for that as well. So the idea is that he will pick someone that supports his policy as well. Now, these are what is going to happen next year, but something that I want to share with you is actually what's actually going to happen in December, in just 10 days' time, which is the end of quantitative tightening. Now, this was reported during the last rate cuts, right, back in October, okay, of what the Federal Reserve said. So this is, for those of you who don't know, right, quantitative tightening, you think of it as like there's a tap, right, and then you control the water flow. When the water flow out, it means you're adding more liquidity to the market. Okay, when you close the tap, that means you stop the water from flowing to the market, right? So what the Federal Reserve do is that previously it was closed. They were tightening, they were reducing the water in the market. What they are doing now is they are going to end this, okay, by December 1st. Okay? And what are they going to do? Okay, this is a bit technical, but basically you can see they are going to reinvest all principal payments from the Fed holdings in the Treasury bill. So in plain terms, right, it basically means that they are going to stop its effort to shrink the money of supply, and they are going to keep the amount of money in the financial system steady, or even slowly increasing it. So it is a shift from taking money out to maintaining it inside the market. That means there will be liquidity inside the market as well. So what does this mean for us, right? That means there'll be more cash, there'll be easier access to credit, and this can also help borrowing costs for companies as well. And it also supports economic activity in the long run, can be positive for stocks too. So what they want to do is they want to avoid this liquidity crisis, because the market runs on liquidity. If there's no liquidity in the market, right, that's where everyone will crash, because everyone will want to sell to raise money. So this thing that they are doing, right, is also a good thing for the market in the long term, because they are going to, like, at the very least maintain the water in the market, which is money, or they're going to add more over time as well. So they are trying to prevent a credit crunch that could make the economy worse. Okay, so this is the thing that is going to happen next. Now, another one which was just announced a few hours ago, okay, and it's not in US, it is Japan. Okay, this is one of probably the biggest news that came out. I would say that might have led to contributed to what happened last night partially as well, which is them announcing a 135 billion stimulus package. Okay, so yesterday there were some talks that they will release a stimulus package of like 110 billion, but now it's 135 billion dollars. Okay, now on the surface, for us as day-to-day consumers, we think it's good. Correct, because you think back in COVID, right? When, at least in Singapore, when our government give us all the money, right? Okay, it's all to help us, right? Is to give us more money to spend. Okay, so on the surface, right, it is good, but the key is how it will affect Japan as well. Because one thing about Japan is that they actually have very high debt levels now of like 230% of GDP. And they are also slowly exiting from ultra easy policy. Okay, so I'll explain both. Now, They have one of the highest debt ratio in the world, debt to GDP ratio. So when they announce this new stimulus package, right, guys, that means what they do, they need to borrow more money. That means this creates uncertainty of how Japan will finance it, be it by selling more bonds or issuing more bonds. Okay, they might not print money. Okay, they didn't say they will print money, but they will announce to sell more bonds or release more bonds, and whether they can actually raise interest without causing problem. So this, right, it affects how money flows in and out of Japan as well. Okay, so it helps the day-to-day people, but if you talk about the global economy, right, it creates that level of uncertainty, and you actually see it, right, in their government bonds, where their 30-year, all their bonds, actually not just 30-year, 20-year, 10-year, 30-year, right, all went up to like an all-time high. Okay, why is this happening? Why is bond yields going up? Okay, not prices, yield. Now, this is what is happening. The market is worried about their financial health. And what happens, right, when you have this massive government spending from the stimulus coming in, combined with potential central bank tightening? Because last year, right, back in August, right, the the Bank of Japan suddenly increased the interest rates. So that means, right, this easy money policy that we had from 0% interest from last time is over already. And now there's the potential that they might continue to increase the interest rates, which when interest rate increase means what? Means there's lesser liquidity, harder for people to borrow, right? And including this stimulus package where they have to go and sell bonds or raise money to it. So this is pretty significant because if they keep issuing bonds at this pace and with that high yield right now, right, it could force the Bank of Japan hands to hike the rates. Okay, because you see, why the bond prices drop? Because Japan will keep issuing more new bonds, right? When you issue more new bonds, right, there's more supply of bonds. When there's more supply, the price will drop. Okay, and when price drop, right, the yield goes up. The percentage yield goes up. Okay, because they needed to kind of attract demand, so the yield goes up. So the price and the yield is works inversely. So this is, and when the yield goes up, it's in a way pegged to how the interest rate is as well, and they could force their hand to increase it. So when they increase the rates, okay, this will actually strengthen the yen, and this is something that we actually saw back in 2024, which is the yen carry trade. Now, what happened? Let's go back in time a little bit. What happened in 2024, right? Was for those of you who don't know how the carry trade works, is this back in previous years, right? For the past 10, 20 years, the interest rates to borrow yen was 0%. You can borrow money at 0%, guys. So what the investors from all around the world do? They borrow yen at 0% and they exchange to USD, and then they use that and they deposit into like even the treasury bills, which can give them like, now treasury bill is like 4%, right? So immediately, right, the banks are straight away earn 4% yield by doing this. Now, that was why back in August, right, what happened to the stock market, right? Okay, you can see what happened back in August, right? There was this 4% drop, was because they suddenly increased the rates. And when they suddenly increased the rates, right? From initially you got 0%, right, interest. Now you need to pay 0.25. So it's spook investor. They have to sell off their assets. That's why they call it unwinding of the yen carry trade over there. Okay, and combined with like strengthening yen, where the yen gets stronger against the USD, right? They have to pay back more as well. So that was what happened then. Now, this time it is a bit different. Okay, this time it is a bit different because why? The rates have not increased yet. People are speculating that the rates will increase. Okay, and the yen actually dropped. Okay, the yen actually weakened against the USD. So, what are people thinking of is that maybe the Bank of Japan might increase rates because of how the yields are increasing, right? So when that increase, right, that's why people might be taking a bit more risk-free approach. They said, before this carry trade 2.0 happens, right, they go and sell their assets. Okay, and you can see it all happened last night, right before they announced today, this morning as well. So this yen carry trade is a key channel because even though you think Japan is small, Japan is a lot of people borrow money from Japan to invest in other companies as well. So then basically it might lead to a carry trade 2.0 lah. Okay, so you can see this was what happened. Now, after I share all this, I know it sounds a bit scary or whatever, right? But I want you guys to look at something. So even just by looking at this, you can see this was back in April 2024, August 2024. But look at where we are now today, even after the drop over there. Okay, in just a 1 year period, look at where we are now. And in fact, right, after yesterday's drop, what did we see? It was actually not yesterday's drop, over the past few days, it was a 5.6% drop in the S&P. But guys, this is not our first rodeo. We have seen this many times before. Okay, like back in Liberation Day, it was down 20%. And even before that, we've seen way worse decline before that 1 year ago, right? 5%, 9%, 6%, 10% drops even. But where is the market now? Okay, now you can see that what matters in the long run, right? Despite macro news taking the headlines, is always how the companies are improving over time. How profitable companies are improving over time. Okay, and it's down 5%, and you can see everyone is saying like, oh, the bear market is here and all that. But I tell you, on average, 1 year we see 4 times of 5% decline. On average, 1 year, you see, this is like the third time we've seen it. So even though right, we go down another 10%, let's go down another 5% down, we will still be higher than this April before the market drops. Right? So what is this thing that why we are sharing this? Is that you want to look at it from a longer term perspective, right? A lot of times, what the news will look and what people will say is based on what is happening now. Okay, but if you extend your lens, right, you look at it from a much longer point of view, you realize that this is just a blip. Okay, this is just a little blip. And you will see, right? I tell you, the interesting, funny thing is that when you see this kind of thing happening, right? Many people will try to go out and they'll read news. They'll go and see what are people saying. But I tell you, the bears will be the one dominating the headline. These are the ones they will come out of hibernation, right? And they will go and spook everyone and tell everyone that doomsday is here. I tell you, if you go on Twitter, you go on X, right? You see it's all filled over there. Okay. So it's like, this kind of stuff will scare you. Okay. But don't waste your time on this kind of thing. Instead, focus on what are the companies that you want to buy. When people are fearful, right, it's actually time for you to go and buy. Right? The key thing, right, is that most people will look at news. But don't look at news. Look at the companies, right? Because now, right, is the opportunity that everyone has been waiting for, the pullbacks. But it's funny, the pullback, then no one wants to look at it anymore, right? So divert your attention more to the actual companies that you have been wanting to add, because the opportunity is just getting better and better and better, right? So if you look at it from a super long term, right? Okay, from a super long term, right, you can see, right, stocks tend to go higher even with bad news, all these geopolitical news. Short term, there'll be turbulence, of course. But when you zoom out, you can look at what's happening ahead. There's a lot of catalysts going on, right? Long term trend speaks for itself. Okay, so I know we've seen this a lot of time, but like what Warren Buffett said, right? Be fearful when others are greedy. Be greedy when others are fearful. Right now, we are at extreme fear. Now is the time when everyone is scared. It's time for us to be greedy. Okay, more often than not, you are scared, right? It's because you have probably done some stuff or you invest in some things that you are not sure about, and you want to look back at the time you invest. Why do you invest in it? Do you invest in it because any Tom, Dick, Harry asks you to invest, or you invest in it because you know the fundamentals out there? And if the thesis is not broken, nothing needs to be done, right? You might even want to buy more, right? But if you are worried, right, you'll probably have over leverage. You probably have done some trades that puts you in a risky position. Okay, so you want to use this as an experience as well to think about how to position your portfolio ahead so that you can avoid these kind of things in future. When your emotions take control, guys, it's very hard for you to focus on. Okay, and remember this one also: bad companies are destroyed by crisis. Good companies survive them, and great companies are improved by them. Okay, it all boils back down to fundamentals over there. And I would say that despite everything that's coming on now, these are some of the best times to buy into great companies, as evident and shown by history for so many decades. Everything that dropped, right, it all came back stronger, and it was because it was all high quality companies. Okay, so that's what I wanted to share. For every one of you, I would definitely love to connect with all of you on Facebook, right? So, pause this video, scan a code, or you can click the link in the description box down below again, okay? And remember, guys, to end this off, remember, patience builds wealth, okay? Only go for high quality companies that your future self will thank you for. Okay, so I hope I enjoyed this video and invest safe.